Hi everyone, and today we're going to be talking about our launch of our 95% proposition across our Hodge Resi and Hodge Resi Retire products. I've got Emma Graham with us, our Business Development Director, who's going to take you through some of the key aspects of that product, some of the drivers within the market that have led us to deciding to enhance our proposition, and general overview of really what 95 means to you and your customers. So, welcome Emma.
Hello.
First question really for you is, can you explain a little bit about what 95% lending really is and what does it mean to the brokers and their clients?
Yeah, sure. I mean, in really simplistic terms, as a lender, we're going to be lending 95% of the customer's mortgage, and the customer will be putting in 5% of their own funds. It's a big step change for Hodge because I think it was only a few years ago the maximum loan to value we were offering was 75%. So to be here today launching 95% for customers lending up to retirement and into retirement is a really, really big deal for us. And I think back to the question you asked with regards to the why and what sort of customers can we help now and how can we support our brokers grow their business. I think if you break down those sort of customer segments, there's probably 5 key segments here. So we've got the older first-time buyers, James. So I think you and I both know that back in 2024, when we did our research, the average age of a first-time buyer in England was 38, I believe.
That's right, yeah.
So, with affordability challenges, with the cost of living, etc., a 38-year-old is going to be taking a 30-year term, a 35-year term, a 40-year term. So 40-year term, that customer is going to be 78 when the mortgage matures. So therefore, that mortgage debt will be going into retirement. So offering 95% loan to value on the Hodge Resi Retire is a lifeline for older customers because they can take that higher loan to value, have that limited deposit and lend all the way through into their retirement. And that is a game changer in the market, and it's really not something that anyone else is doing. So really, really important criteria point for us. Yeah. I think as well, James, we've also got the first-time buyers at the other end of the scale as well. So we've got those younger first-time buyers who are probably, mid-20s, early 20s, quite entrepreneurial. They're working in the gig economy. They've started to earn quite a lot of money quite quickly, but they've not had the longevity to build up a deposit. So therefore, Hodge Resi, 95% loan to value, perfect proposition for them. We can consider 100% of their income. We can take all of that, our sort of manual underwriting, we can take all of that into consideration and really support those customers. I think as well, James, bank of mum and dad, there are many of us that benefit from that, and I was very lucky to benefit from that myself way back when. But for those customers who don't have, parents or grandparents with, spare 40, 50 grand to help them get on the ladder, this proposition will help those customers. They've only got a 5% deposit, not a problem. Yeah. Long-term renters, James, as well. I think the rental market's really tough. I think rent's gone up around 44% over the last decade. So very difficult for people in the private rental sector to save every month to earn that deposit. Again, this proposition helps those customers perfectly. Divorced customers, those customers going through separations. I mean, we carry out the data quite often, James, and I think we see an increase in sort of divorce in customers in the 30s, 40s, 50s and so on. So again, you're starting from scratch, you're paying off your ex-partner, going into a new property with a sole income. Yeah. This proposition can help you with that as well. And I think as well, kind of like overriding that, kind of on the backdrop of that, we've got the lack of a help to buy proposition now as well in England. So that was taken off the table back in 2024, I believe. So again, more customers out there looking to lenders like Hodge to help them if they've got a limited deposit. So lots of need there in the market.
So it sounds like there's a huge variety of customers that will really benefit from this. Yeah. And Hodge has really thought about how it can evolve its proposition to support as many different customers as possible. So, I mean, at Hodge, we're very focused on helping as many people as we can and saying yes wherever we can from a responsible lending perspective. And our history is very much sort of set within the older borrower market, and we've sort of evolved that proposition really to help more and more customers over the recent past. What sort of changes have we made in addition to 95 to help evolve that and open up our proposition to more customers?
No, it's a really good question, James. And I was thinking about this morning. I think, I started Hodge, I joined the bank, I think it was 6 years ago. And you probably joined about 5 years ago, I think.
It was 6 years ago today on filming.
It was actually.
Absolutely.
And I think when I joined Hodge, we were very much a later life lender. We offered an equity release proposition. We had a 55 plus product, so the customer had to be a 55 before they could kind of utilise that product. And we had the Rio. I think loan to values were capped at 75% loan to value, and we didn't even offer a repayment mortgage. It was only interest only. So to look at how the products have evolved to today is seismic. 95% loan to value across the Hodge Resi and Hodge Resi Retire is monumental for us. We now offer repayment mortgages. Age has been taken out of the equation altogether. So these products now span from the age of 21 all the way through to the age of 95. Like you said, James, we can say yes to more customers. But I think more importantly, what this is doing is it's kind of trying to kind of merge the lines between what we would have deemed as being later life lending and kind of standard residential lending, because lending is just lending. And I think what this is, James, it's lifelong lending. It's lending to a customer from 21 to 95, based on when they plan to retire, based on their aspirations, what it is they want to do. So it's very tailored in that sense. So I think all those sort of barriers and kind of pigeonholing of this market, that market, this really helps to eradicate that.
Yeah, and I think it's a really important point that we are, I suppose, a little bit guilty within the industry of siloing customers within their certain segments. And what that's done is, by probably by default and not by intention, is restricted some of the options available to customers. So, but Hodge leading the change across its propositions, it's opened it up and made it more consistent, whatever the customer's age is.
Absolutely, James. And I think if we look back over the last sort of 12, 18 months, we were probably turning down cases for 45-year-olds, 40-year-olds who wanted to take their mortgage into retirement, but they weren't 50. So, I think we've really challenged the market by removing age completely.
And particularly where you've got first-time buyer age increasing to, I think it's well said that it's around about 40 in London, in the southeast, and across the UK we're looking at about, as you mentioned, 38. So, clients are finding it harder to get the deposit together to be able to get their first property and get onto the ladder. And yes, there's Bank of Mum and Dad and other options available, but I think lenders, not just Hodge, but other lenders, are really digging into where they can flex their proposition and where they can support more clients, because first-time buyer market is so integral to the success of the overall mortgage market. It's almost the foundation then that leads on to activity across the board.
Definitely.
And now with Hodge getting involved in that, that's a huge landmark opportunity and position for Hodge to be working into. We're seeing much more individual complex needs now across the mortgage market. Again, I think it's widely known that, I think it's reported over 50% of the mortgage market now is classed as specialist. So specialism is becoming the norm, and there's many lenders like Hodge who have their own niches to support clients in different ways. And being able to have that flexibility and have that unique criteria and understanding that clients won't necessarily fit that, I suppose, traditionally known as vanilla, requirement, is a huge, huge benefit to helping the mortgage market evolve even further.
I think so, and I think, talking about, specialisms as well, I think as well, later life lending is mainstream lending. It's mainstream lending, and I think, look, I'm 50, and I don't look it, I know, but and I don't think of myself as being a later life borrower in any way, shape or form, No. As it stands, my mortgage is going to mature when I'm 67, but I may lend more and it may be 70, and I intend to work all the way through. It's like, things have changed so much now. And
I think culture's changed, hasn't it?
Absolutely.
The industrial, sort of heavy industry jobs, I'd say with my grandfather and maybe my father, they're a thing of the past really, and people are the health and the drive to be able to work on past those traditional retirement ages. And in many cases, they have to as well, because as we know, the pensions aren't maybe as strong as they used to be, and people are going to need that to maintain their standard of living, and maybe even access the equity in their property to be able to maintain that standard of living going forward into retirement as well. With Hodge, with this further flexibility, that offers that to clients and gives them options going forward into later life and from the outset to be able to borrow as much and maximise that affordability that they can.
Lifelong lending, James.
Absolutely.
Lifelong lending.
Of course.
So James, you talk to brokers day in, day out, and you've been talking to a lot of our networks and clubs about this proposition. So very high level, can you just give me a few sort of key selling points of the 95% loan to value proposition for our broker partners?
Yeah, I think we've already mentioned, we're looking to lend to 95% up to and into retirement. So the into retirement is a really key point to that, because I don't think anyone else in the market currently on the term-based product offers that. So we will look at enhanced affordability up to 5 times income. We will be looking at, say, joint 75,000 income for the LTI above the standard 4.49 to kick in. So bear that in mind. We will also be looking for clients with a relatively clean credit score as well. That's an important point, because we're looking to try and help those clients who maybe are new into the market or have existing clean credit to be able to get onto that property ladder at 95%. 40-year terms. Terms have really been stretching out since I took my first mortgage, so it was around about 25 was probably the norm. Again, back, say, 20 years ago, I would say it's probably 30, 35, and maybe even as far as 40 now. And that's an important point, because that helps with affordability, that helps clients then maximise the borrowing level that they're looking for, because they're spreading it over a longer period. Complex income, so we will support the self-employed up to 95% as well. We look at latest year, we look at salary, dividends, and where we need to take a view, maybe retain profit, if that's going to be helpful and it's clear that we can utilise that to support the affordability. We looked at contractors and obviously standard PAYE as well. We also look at multiple jobs. We take 100% of that income towards the affordability. We understand that clients' nature of their work and how they work, it's very much sort of working to suit their life rather than the other way around. And I think that's something that Hodge is very open-minded with, and we've got common sense underwriting that really supports clients in that circumstance. So overall, we're looking at complex income, affordability, maximising the affordability, and helping those clients who really need that support right up to 95%. So if we were going to say, what are the 3 things that brokers and they should be thinking about Hodge as being able to help and support their clients through the 95% proposition, what would you say those are?
I think I've probably answered that question in 2 parts. I think when we talk to brokers about this proposition, and brokers are having conversations with their customers, first and foremost, we are more than just a later life lender.
Absolutely.
James, I think we've evolved and we've moved, leaps and bounds now. So we're a specialist lender now. We're a lender that's willing to support customers from the age of 21 all the way through to the age of 95. I think specifically with this proposition, it's lending up to retirement and it's lending into retirement. That's a real, key selling point for us with the 95% loan to value. I think complex income, so the consideration of 100% of income, and that's including retirement income and earned income up to the age of 80 as well. These are all KSPs that are going to be really, really useful for brokers when they're speaking to their customers as well. And I think those are the key areas that brokers need to bear in mind when they find us on the sourcing platforms at 95% loan to value.
Absolutely, absolutely. I think, from a point of view of brokers who are going to be dealing with Hodge, maybe not on a daily basis, but every now and then be looking at our products as maybe the solution for their clients, need to make the most really of the services that we offer. So our very experienced telephone BDM team who are there to be able to help you with affordability, help you navigate those products, and be able to find a solution or a variety of solutions for your clients, get in touch with us. We've also got a really experienced underwriting team who take a common sense approach and naturally will look to see how they can support the clients and your clients and provide them with the right solution for them. And to really have that conversation, because we're well aware that the brokers maybe coming to us aren't used to dealing in our type of business, might be more dealing with more mainstream business, and we're here to help and support and to impart our knowledge to be able to help you navigate those different solutions available. So, what's next for Hodge after this? Are we going to continue to push the boundaries? Are
Absolutely.
we going to continue to look to innovate the markets
Absolutely.
going forward?
Absolutely, James. I think if you look at Hodge as a brand, you know, we were the first lender to come into the equity release market. Now, we sold our life company way back when. You know, one of the first lenders to bring Rio to the market, 95% lending for customers up to and into retirement, and we will not stop. So, yeah, there is more to come over the coming months, I think, as well as we look to sort of support brokers grow their business and help more customers and to say yes more as well.
And also, I suppose, to help and drive forward what we've seen from the regulator and seen from the FCA in what they're looking to really help lenders and brokers with the client's flexible needs now going forward.
You're spot on, James, and I think the regulator is very clear that, you know, consumers shouldn't be pigeonholed into buckets.
No.
And this, in essence, you know, moves away from that completely. It's just lending.
Absolutely.
It's not a later life product and it's not a standard product. It's just lending, and that's key.
Fantastic. I think that's the best point really for us to finish the session on today. If you've got any further questions at all, please get in touch. Log on to Hodge for Intermediaries. You've got direct numbers to all our team. Myself and Emma will be more than happy to help you with any of your queries as well. And just thanks again for listening, and look forward to helping you out going forward in the future. Thank you, Emma.
Thank you.